Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. Looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin was operating right on top of this $9,400 support. I did tell you that even though we might see a temporary bounce up to about 96, 96.50-ish, that I did think we were going to break down below 9,400. Now, price broke below 9,400, and to be completely fair, I did not expect it to happen that quickly, nor did I expect the bulls to buy it up that quickly. And of course, we can also see as we zoom in here, this was nothing more than massive manipulation where price dumped, came back up, took out stops to the downside. In other words, took out long stop losses, and then came back up and tried to take out anybody entering into a short, at least here in the short term, not to be redundant, came right back up and hit what was our ascending resistance line, or excuse me, what was our ascending support line. This larger ascending support line here has now turned into resistance, and that's right where price rejected off of and just returned basically right down to baseline. So this was a massive manipulation, but it is no coincidence, and it is worth pointing out that I drew this box yesterday. I haven't changed my chart since yesterday's video, and I drew this demand zone between 9,100 and 8,900, basically showing you that there were a lot of buy orders that were sitting down here, guys. How did we know that? We know that because if we come back here on the week of June the 19th, we can see that when price broke up, it basically wicked right on top of 9,100, wick, and then took off, was unable to close deep into this zone. That was denoting they call that a demand zone. Basically, that's denoting a lot of areas where there are some unfilled buy orders. We had that again confirmed when price came back down and found support right on top of that zone again on July the 17th, and then confirmed just again yesterday on July the 28th. So this is a massive demand zone between 9,100 and 8,900. This is why it's so difficult to trade this down to the downside here, because even if we break below 9,400, we've got numerous areas of support down to and including, of course, our major area between 8,900 and 8,500 that everybody is watching. And I find it interesting that everybody is starting to talk about what we've been talking about for the last at least 2 weeks now, and that is, of course, everybody is watching 8,500 to 8,900. So now the popular thing to say is, well, because everybody's watching it and we're so smart, we know that because everyone's watching it, it probably won't happen. In other words, it'll either get front run or it'll get overshot, but it certainly won't bounce between around 8,500 because everyone's expecting it to. So now, as we've been discussing, because everybody thinks that it's not going to happen, it might in fact now happen. And I'm starting to hear analysts repeat that now, that because everyone thinks that it won't happen, then it will happen. So I'm forced to say that if we follow that to its logical conclusion, if that becomes the meme, then of course we're back to maybe this won't happen. But bottom line is, guys, I'm not going to play that. Excuse me, let me take that back. I'm not going to play that game. I am looking at this by pure technical, just purely technically, guys. I'm trying to take the psychology out of it, which sometimes is hard to do, and you shouldn't always do. But in this instance, I think you could go back and forth so many times that at this point, really, you have to default on the technicals, and the technicals do point to somewhere around 8,500. Could that be 83? Could that be 88? Yes, anywhere in there, but somewhere around 8,500 price is, the technicals do point down to that zone in the next few weeks. As of right now, looking at the very short term, it's very difficult to say whether we may get another test up here and testing what was an ascending support is now acting as resistance. As we discussed, we may even see it wick up above that. In fact, if we zoom in here to the 4-hour, I pointed out before, we do have bullish divergence on the MACD. Now, I do think that you could make an argument that it's already played out. That being said, if we come here to the daily, as we pointed out on my last video as well, looking at the daily, we do have some bullish divergence on the daily that, while it isn't yet confirmed, we'd have to have a daily candle close above yesterday's daily candles close. So this isn't yet confirmed bullish divergence on the daily. It certainly is hinting at it, and that would suggest, again, possibly a test back up to around 9,700, if not this $99.50 zone. But if we close above 99.50, if we get a daily candle closing above 99.50, I am going to start to pick targets to the upside. I don't think that's going to happen. My bias is, yes, we may see a temporary tick to the upside, maybe as high as 99.50-ish, somewhere thereabouts, but I do think that we are going to break down eventually over the next week or so below 9,400, and I do think 89 to 8,500 becomes a likely target. It might be a slow drip. It might not happen all at once, but I do think that eventually we do come down to this 89 to 8,500. At least that's what the technical technicals are telling me as of right now. Let's go ahead and look at the weekly. Looking at the weekly, we did now close the weekly candle below the 8-week EMA. As I've discussed before, that does signify on a correction in a bull market here, potentially the beginning of an end. What do I mean by that? I mean by that, historically, anytime we've closed below the 8-week EMA, we did get a little more play to the downside, possibly even the following week closing below the 8-week EMA, so we would have a decisive break below. And again, that does suggest continuation down, very likely to the 21-week EMA, which as of right now sits at about 82.50-ish. If we get another week going by, that'll, of course, will continue to rise. But again, that does suggest continuation down to that week. But it does also suggest that we may be in, again, the beginning of the end of the correction, which means once the correction ends, we can continue back to the upside. It's not until we take out the low on these prior two candles here on the week of July the 3rd and the week of July the 10th, and the low of those candles sit somewhere around 7,500. It's not until we take out 7,500 that I do believe the overall macro trend would be in jeopardy, and I would be looking for much lower targets. Again, we can come all the way down to and including 7,500, and the overall macro trend to the upside will still be intact. As soon as we break below 7,500, I start to get very concerned. Looking at the daily is confirming that the bears are starting to take control of the market. We do have the 8-day EMA crossing below the 55. Of course, the 21 is well below the 8. And if we get the 21 crossing below the 50, that is not going to be a good sign. As of now, we've been unable to break back above the 8-day EMA here, guys. We're still well below the 55-day EMA here. So again, all of this is a sign that the bears are taking a little bit more control of the market here. That being said, on the daily, we are starting to see the bottom Bollinger Band curl up, the upper Bollinger Band curl down. In other words, they're starting to bottleneck, slowly starting to bottleneck, and of course this will be slowly because we're looking at a daily. We also are starting to see the 8, 21, and 55-day EMA all converging on each other here, as well as the 50 simple here. So anytime you see something like this, assuming this does continue here and we get some sideways movement over the next few days and we see the Bollinger Bands bottleneck more, we see the 8, 21, and 55 and the 50 simple all converging more on top of one another, that does signify a much larger move to come. By larger, I would mean at least a $1,000 move to come, very likely. And again, the target would very likely be down there at that $8,500 area, assuming that this continues. Looking at the 4-hour is still very bearish. We rejected right in the 21 period EMA. We are back below the 8 period EMA, and of course we do have that bearish setup with the 55 on top of the 21 on top of the 8-day EMA, or excuse me, the 8 period EMA. We're looking at the 4-hour here. So that is again a bearish setup. We do have some light between the two, which means we've built up a lot of resistance to the upside here, as is evident by price rejecting off of the 21 period EMA on the 4-hour here. So not looking great for the bulls here in the midterm. Overall, larger macro trend to the upside is still intact, but it does look like even in the very short term, we may come up and test, as I said, 97, 9,800, maybe even as high as 9,950. I do still think the midterm is still looking at that $8,500 to $8,900 zone to the downside, as much as I don't want to say it. Yes, this does look potentially like a reversal candle here. I'm not buying that, though. Again, that was all painted by pure manipulation. So yes, we might see a little bit of continuation to the upside. A lot of this is basically to shake out a lot of weak hands that are still in the market, both bullish and bearish. And then I think we continue back down to that 89 to 8,500. Now that, remember, this very likely won't happen right away. This might take a couple of weeks to play out, but I do still think the target is 89 to 8,500. So how am I trading this? Well, basically, as you guys know, looking at the daily here, guys, this does still work as a potential falling wedge. Let's see if it does play out. Now, I say potential very deliberately. This is not yet a confirmed falling wedge, not at all. We still need to see it break decisively below about 9,400 before we could actually start calling this a confirmed falling wedge here. So this is not a confirmed falling wedge by any stretch of the imagination, but it certainly does have the potential of playing out as a falling wedge. And I do think if we do break below 9,400, then decisively, then we'll be looking, as I said, that would suggest a drop to that $8,900 to $8,500 zone. What will invalidate this over the next 48 hours, if we do get a daily candle that opens and closes outside of this descending resistance line here, that's what will invalidate that potential falling wedge. I still will be looking for targets to the downside between 89 and 8,500, but it just may take a little bit longer to play out, and it'll just invalidate the, like I said, the potential falling wedge. So let's wait and see kind of how this ends up playing out. Guys, I'm going to go ahead and wrap things there. I've got to get running here. I'm going to have to cut the video a little bit short. I've got some things going on here. So I don't mean to cut it short here, guys, but unfortunately I'm going to have to. If you have any comments, questions, suggestions, please let me know in the comments section below. Basically, I'm basically mostly very small scalp trades here and there, guys, but for the most part, I'm sitting on my hands waiting for this to resolve itself to the up or to the downside. And again, my bias is to the downside. So I'm going to, as I said, I'm going to wrap things there, guys. Comments, questions, suggestions. Remember to like, notify, hit that notification bell, or like, subscribe, hit the notification bell. Until next time, please trade safe. Take care of yourself. This is Workin, signing out.